Well, let's have a little look at the DAX, shall we?
Matron, take them away.
And a warm welcome to one and all. If it's your first time here, I'm the big fella Scruff, and what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if you find value in what you're about to see, do consider hitting that subscribe button. Genuinely helps and motivates me to do more. Smash the like, share it to your friends, all of that good stuff, and we'll crack on. So why the DAX? Well, every morning I do a strength sheet. And within that strength sheet, I also do a bias, which is here. And it's the only one that's popped up. So I'm keeping half an eye on this today. I'm also going to look at these two sometime in the day. Most likely this one here. Okay. Now, I've already dropped it in and it's actually popping into play as we speak. So what I'm going to do is I'm going to drop an order in. Just underneath this candle here, and I'll be dropping two, because what I have a tendency to do is I like to break trades, but what I'm doing at this moment in time is I'm looking to give myself a bit of a pay rise. Oh, there we go. So I want one of these in at about 10 pips, so that's there. Drop this down to 5 minutes and then I'll kind of explain the trade a bit more as we go. And then we're going to have a runner sort of down here somewhere. Just run this one as long as we can. Okay. Now I can move this up higher into the chart, and I believe that it may well move high. But I just want to get in, get out, get some money. This is kind of racking and stacking, if you like. What that does is it means it pays me quickly and I still have a runner running, and happy days, you make a little bit of money. That's general gist of things. So just while that's playing out, I've already, for the guys, done a breakdown of this. Now, if we drop down into the strength, they will see that strength sheet very early on the morning. That went in at 10 to 8 this morning. And then I back it up by starting to do a bias sheet where it's the basket that I'm looking at, and I try and drill it into basically one trade at a time. And at the moment it's the DAX. So they've seen this well before we've come to market. But I take that a step further because I also do a breakdown. And in this breakdown here, this is exactly what I'm looking at, telling them where I'm going, how I'm going to do it, etc. And again, they see that before we go to market. Now, I think that's the fairest way. And why? Well, it's very easy to say I did this after the event. It's a little bit harder to see it beforehand. And that's kind of my point of difference. I do put my head on the block and I'll say, this is what I'm going to do. This is why I'm going to do it. And then you see the fruits of my labor. Some like it, some don't. What can I say? Did a live stream last night, and I'm giving my time away for free and one thing and another, and I got lacerated, not by the people in the thing. It just, when I looked at sort of the likes, dislikes, it was like, I thought, oh, well, what's the point? Why should I bother? So it does make me wonder, but it raises the question about trading. Trading is the most sort of argumentative job there is, and it's because everybody's got an opinion. But then again, everybody's got an arsehole. Just so happens there's only a couple of people are arseholes, and they're the ones that go because they don't like it. But then you have to ask the question, why don't they like it? It's because they're a failure, and they think everybody else should be a failure. Well, no, not quite. You put the work in, you get the reward out. It's that simple. I was asked the other day how long have I been trading, and I always say it's about 15 years, and I started working it out. It's nearly 19 years I've been doing this. So, of course, I'm going to see things that you don't. Why? Because I've seen it 1,000 times. I'm in and around the markets all the time. And if you think there's X marks the spot, you're a clown. You genuinely are. It doesn't exist. You've got to be able to read the conditions in the market, understand what it is you're looking at, make a logical choice to enter into the market, make a logical choice of position size, and then work it like a job. In other words, follow a set of tasks. If you can't do that, then you're destined to fail. And I say it many times. And I guess this is why I get it kicked into me, you know. I watch some, I very rarely watch trading videos now. Very, very rarely. Because they just, a lot of them wind me up by the saying, oh, this is so easy, you're going to do this and you're going to do that, and you're going to make a gazillion. Oh, look at me, and they'll flash up that P&L on the phone, and I'm like thinking, yeah, of course you did. A load of bloody bollocks. I mean, there's a thing called Photoshop. It's not exactly difficult. But very rarely they'll trade in the moment like what I'm doing here. You know, in fact, I've yet to really see it. Or if they do, it's once in a blue moon. I do it every day. Every day I'm accountable for what goes on. Almost on a rant there, guys. Almost on a rant. So let's have a little look, and I'll kind of break this down a little bit. First of all, why the DAX? Well, why not? It's a good moving market. It can pay you every day. It's very good with retracement. So if you get it wrong, you can get yourself out of trouble. And that's where breaking trades comes into play. Because if you break your trades up, you've got room to move and sort of get yourself in and out of trouble. So that's one thing. And the other is, it was just the best chart of the day. So if we look at this, we've had a stonking run up here, thump. And it's come to a level where it's been before. All right. And look how many times this has been respected. Boom, 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 boom. It's struggling on here. Now, if it breaks through, its next logical point is up here. And that's quite a way to take some heat, you know, and that's why you break these up. Now, I have a decent size account. I can take a lot of sort of heat on it. I can go up to 2-3 grand and it won't really worry me too much. And then that raises the question again. I say, what about risk reward? I don't give a flying toss about risk reward. I genuinely don't. That is, again, it's fool's gold. And I'll tell you for why. It sets you up for a fall. If you're going 1 for 3 or 1 for 5, I did see an idiot on a forum saying, he only takes 1 to 10 trades. How many of them do you win, my friend? Next to none. And why? Because you'll never make the markets work that way. Never. And I asked him, did he make any money? And you know what the answer was? But he's got a system he's working on. Fucking idiot. Anyway, that's me getting on one. And I am going to say that because the guy was a complete tool. Anyway, and that's why I say about argumentative in the industry. If you're making money from this, I don't care how you do it, you're doing it right. But it has to be consistent money. If you're doing a flash in the pan where you make some big money one day and you lose the lot the next day, you're still not trading yet. That's kind of gambling. You want to be consistent running through. Now, risk reward again is a bone of contention because you've got the camp that's the be all and end all of everything. It's not, you know. In fact, it sets you up for a fall, and I'll tell you for why. If you're going 1 to 3 all the time, the market has more chance of taking the 1 than it does the 3. And every time you go to market to try and work out the conditions, they have to be identical. So you need the same stop, same target, same conditions in the market for that system to work. Well, you might get 2 of them, but the conditions are constantly going to change. So it's always going to throw you out. All right? My theory is this. I work 1 to 1. or I start at 1-to-1, I want the market to be able to go that far or that far, and then at least I've got an equal chance either way. Then I break up the position so that it reduces the exposure but increases the upside based on a 1-to-1. All right, so that keeps me grounded, it keeps me safe, and it's actually good business sense to do that. Now the next part of it is I need to understand what the motion of the market is and what it's trying to achieve. Now here we're looking at a daily chart, and I can see that it's struggling on this point. Right, well, if it's struggling on that point, is it a reasonable assumption that if it's got to get through it and it's had 1, 2, 3 goes at it and it can't get through, it's going to step back and then run at it, you know? Well, if that's the case, that step back can pay me the 10 pips I'm after. That's sort of what I'm looking for. I'm looking for that snap. If it gets through, well, then I'm going to have to work my way up, possibly to the tops of here. And I don't really, I mean, if I take this halfway into this zone, that's quite a ways to go. So I'll have to be very careful. And again, breaking up the position makes that easier. Because if I go full position here, because I'm not even sort of 20% of my position yet, I'll build it up. And I break that position up as well, because I'm looking for a pay rise this year, so I'm looking at about £6 a start, up to about 30 quid a point, but I'm going to break it up into sections and see if I can get some money out of it. That's what these 2 orders are for. So one will do 10 pips, cash out, let the other one run. Put the order back in where the other one came, and I might get that 10 pips 2 or 3 times, and then eventually the runner will go, and that'll make me money. Now if it moves up into a second position, I'll do the same thing again, but then I'll do a 3 down to where the break even is, and I'll let the other one run. And the idea is it's building money in the bank all the time. Now at the minute I don't have anything because it's a new week, Monday. It's also a new tax year for me, so I'm wiping everything clean today. So it's a new journal. I funded this with 50 grand, and then I've got money in a slush fund in a bank account, so if I ever run out of money I can put it back in. That's a good tip as well, guys. Don't hold all of your money in the broker. Have a bank account and a broker account, and only hold in your brokerage what you need to up your margins. Now I'm starting this year off with 50k, but I have money in the bank that I can top it up if I need to. So I can easily do my 30 quid a point and not worry about it. You know, I work on £1 a thousand, so it can go up to £50 a point. Right? But I like a bit of buffer. All right, and I only like to trade one asset at a time. Now I can trade more if I wish, but then it starts stressing the account out. But it also stresses me out because I've got to concentrate harder. Anyway, sorry, getting on one. So that's what we're looking at here. Drop this to 4 hours. Now we can see that's running. Where can we target this thing? Well, if we drop a fib onto it, drop a fib, drop that up there. There's our 23. So we're actually going to be working this top section here. All right. And I've targeted into this cluster point here. You can see it. So I'm well in the noise, if you like, because that can easily run down to 23. But if I target appropriately, which is around here, I'll get paid. So I'm quite happy with that. Drop it into 1 hour. This is an anchor chart, and we can see what's going on. Now this shows it a little bit more clearly. These zones for me, they just work as entry exit zones. So I want to enter in a red and I want to be out by the green. If I enter in a green, I want to be out by the red, unless there's a stumbling block. Now there's a stumbling block there, which is a level I've put in. If that comes all the way down, I'll watch that level. All right. And it's all about mapping the chart. Everything is about mapping charts out. So there's a decent run here. It's come down, it's pushed up, and then it's starting to move back down again. So this can also show you decent levels to keep an eye on. And why? Well, because it's a sustained move. And if we look at the way that it went up, came down, and then it came back down into this section, which if you look across the left is where the plateau is there, and also back to this swing point. So the chart's constantly telling you what it wants to show you. And it's not difficult. It really isn't difficult, guys. Take it into 15 minutes, have a look. This here has caught my eye, which is the gap from last night, Sunday night. And will it fill it? It could well do. So it can push it all the way up onto the top of this red and then come back down again. But as long as it's holding under here, I'm happy to trade down, because what you'll notice with gaps, they don't necessarily fill straight away. Sometimes it can take 2 or 3 days to finally come round and fill it up. You know, sort of imbalance gaps where it's sort of between candles, 3 candle pattern with a power shift in the middle. They don't necessarily fill all the time, but these do. Very rarely these won't fill. And this one here is an island cluster. Now an island cluster is where you've got a gap here, pushes up, and then there's a gap on the other side, and it creates like an island. It doesn't happen that often, but when it does, it's something to keep an eye on, you know. So that'll be down, and then we'll trade back up into it. Okay. But at the moment, I only want to go short. That's what we're going to do. So let's play this out, and I'll come back to you at the end. Okay guys, it's my day done. Don't particularly like trading Monday at the best of times, but as usual I get goaded into doing it, and here we go. Now I was looking at 3 markets, and as you can see on this one, it's stalled bang on the level that I marked in, and that's where I targeted, so I was happy with that. It also stalled on this level, again reinforcing that levels are incredibly important. So I'm happy with that. The premise of the trade was very simple. We have a strong drive up, clear sign to the downside, down it comes. What's this level? Well, what do we know? It's cluster points. Simple. All right, so that's fine. Look at the oil. Oil was exactly the same situation. Up, stalled on the level, showing signs to the downside, caught the drop, targeted roughly around these low swing points, which was here. Took 2 bites of the cherry, and again, if we look to the left, it's a stall running on a level, and that level again has been respected in the past. Simple stuff. And then drop it finally back down into this. Well, I told you what the situation was this at the start. and it's sort of hovering around, it's doing its bit. It could well drop down, but it's already paid me. So the question you ask yourself is, do you want to risk going back to market? Well, the answer is no, because I've got a half decent amount of money out of it. You know, I can easily treble this by increasing my position sizes. But the problem with putting the big position size is it then starts taking you into the emotional context of trading. In other words, it gets a bit bloody scary. You know, if I've got 3 accounts running and 2 of them are incredibly fast markets, the DAX and oil, and I get it wrong really quick. And it's not something that I want to sit in. But I'm happy with what I've done. And as you can see, it hasn't gone far. But it paid me. It's paid me quite well. And that's all we're here for as traders, guys. It doesn't matter if it moves this much or this much, as long as you get paid. And how you do it doesn't matter. Get your levels in place. Pick a direction and stick with it, and have a reasonable assumption as to why and how you're going to get in. But stick with that direction. If you've got the direction right, it'll forgive a bad entry. And then when you stage backwards, well, you just get a better price and probably end up entering where you should have entered in the first place, and that'll pay you. But in the meantime, when you're carving backwards and forwards, you get your money out. And that's kind of what we do every day, or what I do every day. And then once I'm paid, I walk. And it's that simple. And I'm going to pull up something. And it's for the old fossil. Because the guys are doing really well in the group. But I'm going to highlight something. Pete's doing really well. All right. He's got a daily target of $8, but he's banked 18, and then he's asking, should he go back to market? Well, I'm going to answer that for you, Fossil. One, you're doing very well. Keep trucking, keep doing what you're doing. It's a private joke, by the way, why I call him Fossil, because he's older than me. I'm the young Fossil, he's the old Fossil, but love him to bits. In answer to that is the emotional context of trading. In other words, you've been paid. Do you really need to go back to market? The answer is no, it's not. What happens there is you start teaching yourself bad habits. And those bad habits are the ones that are going to trip you up eventually. Because you'll win. And you sort of think, I'm king of the tree. I've got this off pat. But the problem is, the day that you up the position size is the day the market goes, nah, I think I'll play my way today and give you a royal old slap. So you're tempting fate. So my advice is, if you've done double your daily allowance, you know, in this case, you're on $8 or whatever it was for your daily target to hit the challenge, and I'll touch on the challenges in a second, and you've done 16, in your case 18, you've outperformed the market amazingly. So pat yourself on the back, have a cup of coffee. You know, I've got mine here, you know, because we all know Scruffy likes a coffee, and he certainly likes it in his bloody Forex mugs. And if you want one of these mugs, there's a merch shelf underneath. That's Winky's little business. Do support her. Delivers worldwide, cheap as chips, and it's pretty much free delivery worldwide as well, unless you're in the darkest corner. Anyway, cut long story short, grab a coffee, relax, and enjoy the fruits of your labor. And that's it. And I was touching on challenges, what they are. Our preferred prop firm is the 5%ers, and if you drop in the description or the comments, there'll be a link and you get 5% off that. And basically, if you don't know what a prop fund is, it's where they put the money up for you to go to market, you trade it, and you have a profit split. Very, very simple. You pay a small admin fee to join the program, and your return on investment for that fee is massive. You know, so you put a couple £100 in, that's it. You know, because when you hit a milestone, they increase the allotted funds, and those allotted funds are a lot more worth a lot more than you will compounding up. So it speeds up the process, and then take the profit out of one, put it into your own account, and you've got best of both worlds. Very, very simple. So that's it, guys. That's my day done. It's my job done. If you've enjoyed it, do smash the like button. Do share it to your friends to help this channel continue. And if you're stuck, all my contact details are in the description and comments. Have a chat with me. I'm pretty open book to a degree. If you're stuck, I will try and help you. And if you really want to see how trading's done, come find the Scruffy Squad. And you'll see it in real time and before trades is taken, and hopefully learn a thing or two. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.